How do you go from knocking on doors in 2009 to building a nationwide commercial real estate portfolio and helping others achieve financial freedom along the way? In today's episode, I'm sitting down with Jess Reed, a former residential agent turned full-time investor who's overseen over $50 million in real estate deals. We talk about the early hustle, the shift from residential to commercial, the power of cash flow, and the painful lessons he's learned from the wrong partnership. If you're a residential agent thinking about investing or you're looking for real-world insight into scaling the portfolio the right way, this one's for you. Let's get to it. So Jess, you came to Nashville in 2009. You got started in door-to-door sales.
Yep.
That's not easy to do. What made you stick with it for so long when so many others that get into door-to-door sales quit?
I think, within my first couple of days out knocking on doors, I got a couple of sales, and, I think I was making $350 per deal. And so I just kind of quickly did the math in my head. I was like, wow, I made $350 today, or I made $900 today, and I worked for 4 hours. Like, I recognize that some days I may do one, some days I may do zero, some days I may do three. But I think I just realized, like, for me, it was worth, again, sort of controlling my time and knowing, like, I would rather do that and take the gamble of having a day where I didn't make any, but also having the potential of making $900, $1,200 versus going into an office where I knew I was only going to make $20 an hour. And it was something I didn't want to do anyway.
Yeah,
right?
I got mine started in Cutco,
Yeah.
selling knives, man.
Yeah.
So it wasn't quite door to door, but it's the same principle. If
Totally.
you're having a cold call
Yeah.
and find, potential buyers every single day, right? You're only as good as your last sale, which I think is incredible training for investing in real estate.
Totally.
Because it's the exact same process, right?
Yeah, absolutely.
So, I mean, you've said that you loved sales because it gave you control over your time and your income. And how has that mindset really served you on the real estate side of things?
I mean, I think moving from door-to-door sales into real estate. So in 2012, I got my real estate license. I was a residential broker, and it was just a higher ticket. When I first got started, I just kind of saw it as a higher ticket item. It was like, wow, if I can go find 8 people that are looking to buy houses and they're all going to spend $300,000 on a house, that's a great month or a week or whatever, right? And so again, I think I just saw it as a stepping stone into a new opportunity where I was essentially doing the same thing, which is sitting down, listening to people, listening to their concerns, listening to their needs, and then taking that information and helping them solve the problem as quickly as I could. And I think for me in real estate, when I was first getting started, that was something that I was pretty good at because I didn't have to go out and show. Sure, there were some outliers, but I wasn't showing 20 houses to a buyer. I was very good at getting clear on what they were looking for. So most times I could show them 4 or 5 houses and one of them fit the bill. And it was a quicker process with those clients. And that just made me have more space to have more clients, but also have more free time at the same time. So
when did you make the switch from real estate agent to real estate investor? And talk us through that first deal.
So the first real deal was actually I bought a house for myself, and I had 2 roommates, and they were paying to live with me. They were friends of mine. We were having a good time. This was in 2014, and I was like, wait a second. I've got this amazing house. It's in Wedgwood, Houston, and I'm not paying a dime. I went from renting a place that was $1,200, $1,300 a month to now I have my own house, and I'm not even paying any of the bills. The mortgage is paid. The water's paid. Everything is paid. I was like, this is pretty cool. And so then I kind of started thinking about how can I go get more properties that are cash flowing. And so this whole idea of building cash flow started to kind of seep into my thought process. And, originally it was just, okay, cool. I've got my primary home. It's paying my mortgage. How can I go out and get all of my bills, my cell phone bills, $200, my insurance, $200. How can I go get another asset that's paying me $400-$600 a month to take care of those expenses? So then it became sort of a process of just checking off those boxes of how do I get all of my fixed expenses paid for with real estate.
So what did that look like? Did you go out and start buying more single family homes?
Yeah.
So, I mean, how did
Yeah.
you
So
approach that?
my first true investment property was down in Alabama. So I bought a property in near Muscle Shoals, and I think I paid like $60,000 for it, and got a tenant in there. I think my mortgage was like $400 a month, and tenant was paying $1,200 a month. And I had a property manager because I wasn't going to be going down there to keep tabs on the place, and so they got 10% of the rent, and I was still left over with by the time taxes and everything were paid, I was making like $400 a month on that property. So and you do the math on that. I think I put down maybe $10,000, so I'm making $4,000, $5,000 a year on $10,000. That's a pretty good return.
Not too bad.
So I bought a couple more properties in Alabama. I bought a few properties around here, but then I sort of started. It was becoming a good bit of work.
Is that what made you shift your focus into commercial? Like, how did you discover commercial real estate, and what did you think was the opportunity there?
So Ryan Stackhouse, my partner with Cash Flow to Freedom, he was a mortgage broker for almost 20 years, and we actually did deals together. So when I was an agent, he was a broker. We were doing deals. So occasionally we would get together, have lunch, and kind of talk shop. We were both buying investment properties. And he started getting into the commercial space a year or two before I did. And one of our last conversations, he was kind of painting the picture of how things were going for him in the commercial space. And it seemed from talking to him like it was a little less drama, a little less headache. Some of the variables that I was starting to feel, he was removing from his plate. And I was like, that sounds pretty good. And so, we ended up partnering together on a couple of commercial deals, just he and I. And we were sort of off and running from there.
You've built a personal portfolio and launched a coaching platform. Mm-hmm. I mean, you have gone and done so many different types of commercial deals. I mean, what were some inflection points or bottlenecks that started to get in your way as you guys were scaling the portfolio you have today?
I think inflection points, just realizing that financial freedom wasn't as far off as I thought it was. I think growing up and you hear about financial freedom. Most people they hear that like, yeah, right. That's for rich people. You got to have millions and millions of dollars. But for me, when I was getting started, my expenses were like $4,000 a month. So I was able to quickly kind of knock that out. And, by definition, my cash flow was greater than my expenses. I was free. Right now, I wasn't going to be going and buying Gulfstreams and yachts and things like that. But I had control of my time at that point because my income wasn't dictated by me going and showing up and selling another house to make another paycheck, right? And so I think that process of just recognizing that financial freedom wasn't that far off was a huge inflection point. And then I think for me, bottlenecks were just, some of the day-to-day operations of owning commercial properties, right? We've got stuff in Texas, Florida, Indiana, all over the Southeast, a couple outliers. And, when some of those issues pop up, we're not there. And so I think for us, it was finding really good, partners in a sense that can go out and handle some of those variables in those different locations so that we weren't having to scramble trying to figure out, well, who's going to get on a plane and go to Odessa, Texas, and figure out what needs to be solved here.
Yeah, fortunately, Ryan's not too far.
Ryan's not too far.
I bet he won the vote down.
And back in the day when he was traveling all over the country in his RV, he would kind of pop in on all the properties and kind of check in, and he still does that some. But again, for us, the triple net, absolute net lease space, and again, that was a mindset shift, right? Coming from residential where I'm thinking, are these renters going to trash my place completely? Like, what am I getting into? I started Airbnb one of my properties, and I didn't know what I was going to, come Monday morning when they checked out, I didn't know what I was going to see when I walked in, right? And so that idea of like, are these people going to take care of my place? You transition into commercial, and it's like, these are businesses. They have customers coming in here on a daily basis. They have their own capital invested in these properties in most cases. They have no interest in trashing the place, right? So it was kind of a mental shift there. It was definitely the right play for us, I think. Just having, more time freedom and just less stress, I think, is the big kicker.
Yeah, finding the right partners is incredibly important. That's a critical step. So commercial real estate is very much a team sport. No man is an island when it comes to this industry. And y'all are investing all over the country. Maybe not California, maybe not New York, but they're spread out. What does the day-to-day asset management look like on y'all's side?
It's pretty low key, honestly. Again, because all of our stuff is long-term tenants. These are 10, 15-year leases. Majority of these tenants, I mean, they've been in these properties for 10, 20, 30, even 40 years, some of these properties. So again, like there's no worry about, well, what are they doing? Are they taking care of the place? Are they taking care of deferred maintenance? All these things, like they have taken phenomenal care of these properties. And so, there is check-ins, right? I mean, there's yearly, maybe semi-annual check-ins on the properties, but we don't have property management at these properties because, again, for all the reasons that I just explained. But we have kind of quarterly updates on the properties, and we check in with the owners here and there. Is there anything that you need? Every now and again we'll have a leaky metal roof or something that we have to get taken care of, but it's minor stuff. We fortunately don't have any massive headaches that we have to deal with very often. Now, obviously, stuff happens for sure, but it's few and far between.
So when y'all started bringing in investors, I mean, what was the biggest challenge on that front? Like, how are you handling the pitch? How are you gaining trust? Because having investors on board is crucial if you want to scale this.
Sure.
Right? And syndication makes that significantly easier.
Yeah, I think when we started, again, Ryan and I were doing deals, he and I together, and we got to a place where all of our funds were exhausted. And so we said to ourselves, well, our options are we can either go make more money, save more money to invest. And that timeline wasn't fast enough. And so we said, we have to start using other people's money. And so when we started having those conversations, honestly, it was not as difficult of a swing as I thought, because I think we were talking to people that were doing all the things that we've been told our whole lives, right? Go max out the 401k, go do all these things so that when you get to this, golden age and you retire, like you'll have something there to do. And I think most people are kind of starting to wake up to this idea of like, how do I build cash flow that I can utilize now? Like, I don't want to wait until I'm 70 years old. I want to build cash flow that can fund life now. And that was sort of the pitch, so to speak. It was really more obviously the deal points, what they could expect from a yearly rate of return, how long is their capital going to be tied up, all that stuff, of course. But more importantly, like, what's the cash flow going to do to you? Hey, you're going to be making $650 a month on this deal. How does that help provide some breathing room for you in your life?
Yeah.
Yeah.
I mean, with that being said, your approach is heavier on the cash flow side, not so heavy on the appreciation side. That doesn't mean that you're not going to get the appreciation. That's just not your focus when you're buying these assets. Right. Interest rates are higher today.
Yep.
How are y'all approaching deals and making them work?
It's been tough. I mean, this past year has been slow. We're honestly just now getting to a place where we're starting to see some deals that pencil out. We've got a deal locked up now. We've got another LOI out now as well that we're waiting to hear back for. But last year, I think we closed the deal in January of 24. We didn't do another deal. Because it just didn't make any sense. I mean, the interest rates were and still are, high, and we've got to be at 9 at a minimum, really 9.25 cap for it to make sense. Again, when you're syndicating, you've got investors to pay, preferred rate of returns to pay. You've got to have even more meat on the bone. And obviously, Ryan and I want to make something on the back end. And, we would be looking at deals and it's like, cool, like it's going to be a $1.8 million raise and we're going to make $620 a month. We're like, pass. We would rather just wait and, kind of stockpile cash. And when I say that, I just mean, we've got investors that have verbally said, hey, I'm ready to go when you guys have something. So we've got, in the process of waiting really over 12 months for a new deal, we've got tons of investors that are kind of sitting there ready to rock and roll. But it's been a challenge to make deals work with the rates where they are.
I think that's a prudent investment decision, though, right? I mean, I didn't buy. I mean, the last deal that we bought was Peerless Mill, which you're a partner with me on,
right? And
then I bought a self-storage facility in December, up in Madison, and that's 2 years, between deals, but. Just like you look at it and you're like, I'm not going to get out of bed and take the risk for $620 a month. I mean, today, right? I mean, just 15 years ago would have.
Totally.
But
it's just not worth it. I mean, again, for Ron and I both, we are very much aligned a lot in the way that we think, and peace of mind and just peace of mind in our day-to-day lives and how we live is huge. And it's just not worth it to do a deal just to do a deal. Right. If it doesn't really make sense, or if there's some variables that we just aren't comfortable with, we're not going to do the deal. We would rather just wait for a better deal to come along than to make a deal happen.
Well, you don't get to the point in real estate investing, right, where you have a portfolio like this, you have the passive income, you get the lifestyle that you want without getting a couple battle scars along the way.
100%.
What was the biggest mistake that you made in growing to this point, and what did you take away from that?
I think my biggest mistake has been I had a bad partner on a deal. Not obviously Ryan, my partner on syndications and with Cash Flow to Freedom, but I had a partner on a mobile home park in Texas who once we closed on I funded the deal, and the deal was going to be that he was going to manage the place. And obviously with a mobile home park, there's lots of variables that somebody needs to be on the ground taking care of stuff, right? And that was going to be the deal. And we closed on the deal, and less than 2 months later, he moves to Africa, which he knew about but didn't tell me about, like in the process. Obviously, I would never have done the deal had I known you were going to move continents, right? Because you can't manage any property, much less a mobile home park in Texas from Africa. And so that just opened the doors to 2 years, I think, of just a nightmare. And when I say that, I didn't lose a ton of money on that deal, but it totally disrupted my peace of mind, and which I've already said is incredibly important to me. And it just totally hijacked my peace of mind for like 2 years. And we have been able to sell that property. I got almost all of my principal back, not quite all of it. And oh, by the way, wasn't making money on my money for that whole time. So that was a loss, right? But I was able to recoup a hefty chunk of the principal, which was great. But again, more importantly, that 2 years was it was terrible, dude. Just dealing with that.
So your operating partner moves to Africa, thinking he's going to operate from. I mean, what was going through his mind? What was his thought process on this?
I wish I could tell you. I really don't know, because that was like my response, right? Like, what are you thinking? Like, how do you think this is going to play out, right? And multiple, I'm sorry's, I'm going to fix it. So you get it, right? There were so many like checkpoints where I kind of started thinking, okay, cool, we're going to get this back on track, because it had the potential to make great money. I mean, the first maybe 4 or 5 months, even after he left, the current tenants were still there. Everything was okay. I mean, I was making like 22% on my money, right? So cool. But that quickly went away. And it was just kind of broken promise after broken promise. And I just, I don't handle that well with dealing with adults, right? That say they're going to do something and then they just don't do it.
Yeah, I don't know how. That's.
It was rough.
That's
man.
fucking nuts.
Yeah, it was crazy.
When you get into a partnership, delegating roles, incredibly important, right?
Yeah.
It sounds like it was pretty clear. I'm funding it, you're operating it.
Yep.
But that's every real estate investor's worst nightmare when it comes to a partnership. Is my partner's not going to uphold their end of the bargain. They're not going to carry their weight.
Yeah.
How have you approached that since? Do you have clauses in your operating agreements? Are you just stricter on who you'll actually jump into a deal with? How does that process look now?
That partnership came about from word of mouth from somebody that I trusted, and it just wasn't enough due diligence. That person is still, somebody that I trust very much. And quite frankly, it was something that he didn't even see. And that same partner of mine had some shady dealings with the person that referred him to me. So we were both kind of at one point comparing notes. My situation was a bit more severe. So I don't, there was no blame to him for making the introduction, but that was really all that I went on. And so, I think I learned, hey, even when it's somebody that like and trust that's referring you to somebody, do your own due diligence and really make sure, because, people can hide stuff, right? I mean, people can put on a game face and say all the right things, but then turn it off and become a totally different person, or just not uphold what they said they were going to do. And so to answer your question, I mean, I'm super careful, and I really don't, Ryan and I have been partners for a handful of years. There's very few things that I'm really like looking to partner on with other people at this point, honestly.
Yeah, I realized, like, when I was first getting started in my career, I was like willing to partner with just about anybody that I felt like was a good person. And like you, now my circle is so tight. People reach out to me about wanting to partner on deals, or, I'll go bird dog a deal for you. And it's really tough.
Yeah. I mean, you do the risk reward on it. It's like, yeah, I think I'm good. I mean, and early on, to your point, like you're trying to make those connections because there's gaps in your own levels of experience. And so it makes sense to have those partnerships sometimes. But when you get to a place where you've got something to lose, maybe even like when you're getting started, you got nothing to lose. Like, let's go make something happen. But listen, I've got a wife, I've got kids, like I've got things of incredible value to me that I'm just not willing to take on certain things. And I'm totally fine with that.
Yeah. It's funny how much of an advantage that is when you're younger to not have any of that.
Sure.
To be willing to jump off that cliff.
Yeah.
But it's also pretty nice to be at this point where you don't have to jump off the cliff anymore.
Totally. 100%.
Right? What advice would you give to another residential agent that is listening to the podcast and relating to a lot of your story that's considering jumping in and investing?
Begin. I would say begin, because I think, there's so many agents out there that are crushing it. They're making tons of money, but they're not investing any of it. I see it all the time. I see people getting into real estate and they're coming from bartending jobs or jobs where they were making $35,000 a year. And then their first year as an agent, they make $140,000 and they go out and buy a Land Rover. I'm like, what are you doing? Go buy a rental property, go build cash flow so that you can get to a place where, listen, if you love what you do, great, keep doing what you do, but build cash flow so that you can have some options, so that if you want to take your kids to Europe for the summer, or you want to do some of these things, you have the option to do that. This isn't all about like, hey, you need to build cash flow because you hate your job and you want to get out of there as quick as possible. I know plenty of people that build a lot of cash flow that love what they do, but the cash flow just gives them options for if they want to take a break, or if one day they want to let off the gas a little bit. They haven't become so accustomed to the lifestyle that's come from the activity level of selling houses, all that activity, and they can then kind of make some different decisions.
And it never hurts to have a safety net as well that pays you.
Absolutely.
If something, happens, right, you've got the cash flow coming in to pay for it.
I mean, we saw it, when the market shifted here a little bit a couple of years ago, right? I mean, and when rates jumped up, I mean, the market changes. Like, I talked to agents and mortgage brokers that weren't having deals coming in. It's like, if that was the sole source of income and they go from $40,000 a month to almost nothing, and they've got nothing in place to safeguard, that's a scary situation.
Looking back on your journey now, starting off your career door knocking, and now you've overseen over $50 million worth of real estate deals. What's one lesson that you wish you could take back to yourself in 2009?
One lesson I would say is just enjoy the process. I think for me, when I was first starting out, I wanted everything to happen so quickly, and I wanted it all like now. And I think I was chasing the money more than I was what I was actually going to do with the money. And I realized, as I got started, like, the money is only one piece of it, right? It's really, for me, the time component, because I'll take the time over the money 10 out of 10 times. You either have control of your time or you don't, right? There's really no gray area there. The money just dictates how you're able to spend your time. And I think for me, I would have just told myself, like, listen, it's a process, it's a journey. You're going to get there. Just keep showing up every single day. You don't have to have it all right now. Just enjoy the process, enjoy your friendships, enjoy the process of just learning what you're learning, and keep showing up, and everything's going to work out for itself.
What's next for Jess Reed?
Well, I've got a baby coming in at the end of August, another girl.
Congrats.
And thank you. And so, listen, becoming a dad totally just changed my life. I mean, my daughter Frankie will be 4 next month, and it just totally changed the lens in which I see everything, and just how I prioritize my time and my focus, and in the best way possible. And so the idea of having another girl and being able to kind of go through all those firsts again is going to be a ton of fun. So that's next. And then obviously lots of real estate deals. Ryan and I are still doing our cash flow to freedom, still doing some coaching. And so still rocking and rolling on that front too. So
awesome. Yeah. Well, Jess, if anybody wants to reach out, they want to learn more about cash flow to freedom, where can they find you? The
Jess Reed at Instagram is really the main point of contact at this point. We've got cashflowtofreedom.co as well, where they can learn about courses and live events, stuff like that.
Awesome.
Yeah, man.
Thanks, man.
Yeah, man.